Hello investors, we are going to talk about the timing widget in this video. So the timing widget is the widget that you see here that you can turn on and off this way. What you can do with this widget is assess the size, the risk, and the timing of where and in what quantity you should buy that stock. So first, have a look at the widget. It has several parts, several boxes where you can find some information. The first thing to note is the timing, and that is now, as you can see, the timing is of course all three of these indicators, market score, timing bias, and momentum. When they're all above zero, it tells you that it could be a good timing as far as buying the stock just based on price movement. You have also a recap in the last 5 days, so today is the last point here, and then you see how are those three variables there. Once you've assessed this, you have very important metrics here. So first, the stock price at the earning day. So ED is earning day, so the stock price on the earning day, the day of earning, and also the change since then. So it's up 14, almost 15% since the earning day. Current price is 214. This is the volume ratio weekly and daily. So this tells you if there's an abnormal week or an abnormal day for the stock. So clearly this week is an abnormal week for Apple. It's 1.5 times its current weekly volume. So that's an important week for the stock. Right on the side of this box, you can see the target price forecasted by the analysts at Wall Street. And it gives you the 206 as the median, the high and the low target price. So it could be a good indication of where the price could be going in the next 12 months. On the side, you have this visual here that tells you the 52-week high, 52-week low. In yellow, in blue, you have the high and the low, 30-day high and 30-day low. You also have the earning day here in the middle. And then the average true range, one average true range and two average true range that we can see here at 209 and 203. So we'll get to this in a second. But the interesting thing is really having a visual cue as to where the price is, which is the red dot. So it's definitely at its 30-day high and 52-week high. So that's very important. So really quick visual cue to tell you where the stock is compared to where it's being traded, and also the risk, how much you're risking in dollar term or in price. So how much we're risking in dollar term, that's a good question. So we go on this little box on the left on the basis of a $10,000 investment. So if you want to invest $10,000 in Apple, that will be about 46 shares that you can buy because it's $214. But the important thing is here, this max loss number. So max loss number is telling you that the two ATR, so ATR is average true range for the past 90 days, the two times an ATR will bring the price down to $203 from $214, and out of $10,000 you will be losing about $476, right? So this is important to know that, all right, so if, potentially I can lose about $500 or $476 on that. And for this is helping you place your stop. So one ATR will make you lose $238, two ATR $476, one ATR on a weekly basis about $700, and a 2 sigma average true range on a daily basis will make you lose 833. So if you take the entire data set of all the prices over the previous 90 days, and you take two standard deviations, so really 95% of all the data, and you take the 95% worst case scenario, then you'll be able, it will tell you here that it could be about $833. So quite a chunk. So really this widget is super useful to size your position, your investment position, assess your risk in ATR terms. But then we can bring that to the screener, and we'll go to the timing momentum category, and then what we'll do is we'll screen for the max loss average range 2 days, and then we'll sort, and you'll say, out of all this, I'm willing or okay to lose about $500 for an investment that I would want to make, right? So a $10,000 investment. So for $10,000, $10,000 investment, you have this little eye here that gives you eye icon that gives you information of what this field is about. So for $10,000 investment, what will be the move down in dollar term, meaning in money that I will lose? So this is very useful to really, assess your risk. You can increase the market cap. You can add in distance to the mean price target, which is also useful. So it tells you how far it has to run, or is it above or below. So obviously if it's negative, it's going to be above. But let's say, for example, American Airline here, the first one, has a 35% distance to the mean target price, and you're going to lose about $500. So if you want some stocks that have a little bit to run, maybe about 10-15% to run, so that'll be your target up boundary, and then you would want to sort by the minimum loss that I can make. Obviously some are quite illiquid, but we can remove them. But you have some Sony Corporation or Grab Holdings or Las Vegas Sand. So if we click on Las Vegas Sand, you can see the timing widget for Las Vegas Sand. It's only $43. Only $225. And it's really kind of at the bottom, at the low of its trading range. So that's also why it's far away from its mean target. From analysts. So there you go. So really fields in the screener that are very useful. This timing widget, again, very useful. And we think that will be very useful for investors. And play around with it. If you have any questions, you can always send us an email at support@EPSMomentum.com. Thank you very much for your attention.